Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, September 24th, 2019. So much to cover today, not even sure where to begin, but let's just take it chronologically. What I'll do is start where we picked up, where we left off last night for, those of you that follow the YouTube channel, and as well as public content on the site. Some of the posts, general market analysis. Sometimes those are sometimes they're reserved for subscribers, but we'll start here last night after the market wrap in the evening. It was a little late. I usually don't post them that late. Got out about 9:45. I noticed something reviewing the charts I hadn't before. We'll start there. So that post was titled S&P 500 Bear Flag or Head and Shoulders Pattern. Pick your poisons. So either one, 6 to 1, half dozen to others. It didn't matter because the breakdown point was exact same level. And what I really liked about this as well is the price targets, which still haven't been met. We're close, but not there yet. So I think there's more downside. The measured targets on those patterns measure exactly to the same level I've been talking about for weeks now, the top of the August trading range. So again, this was last night's chart showing, and I assumed a breakdown today. This was posted last night, so I said, assuming a breakdown tomorrow. So the measured target, by the way, and I covered this earlier for members, so the measured target of a head and shoulders pattern, you take the distance from the head. And so what I'll do is I'll draw a trend line. I'm using a drawing tool here. It's not my trend line software because I'm on a screenshot of last night's chart. But then I'll right click on TC2000, say create parallel trend line, and then I'll drag that parallel trend line, which is what I did here, and then I add it to where to get the measured target of a head and shoulders topping pattern, you take that distance of the neck between the head and the neckline, add it to where it breaks down. And I like to do that too because when I create a parallel trend line, it gives me a sloping trend line, and that gives you a kind of helps to guide as to when you might not get there. The typical, when I started reading the textbooks many years ago, you had to pull out a pencil. That's the way they taught you to do it. Look at the price level, subtract that price level to get the distance, and then subtract it to the point it broke down. Well, shortly after that, I found out it's just a heck of a lot easier to just draw it with a trend line, replicate that trend line. You're getting the same distance, especially if you're using a log scale. There's no differential in prices when you use log scaling. And again, the fact that it's a sloping trend line will kind of give you a rough estimate of when it gets there, because usually when these things break down, they play out pretty quick. So anyway, that's where it was on. And what I had mentioned too, because I've been highlighting the head and shoulders pattern since it was only in its early stages. I started highlighting it back on the NASDAQ 100, and I did say it wasn't that clean on the S&P 500 futures, and that's why I put this post up last night. But it's just a beautiful, very symmetrical pattern here on the S&P 500. This is a cash. This is what trades during the regular trading session, or as a futures trade around the clock. That's why we had a slightly distorted picture, not such a symmetrical head and shoulders on the ES, although we still had a pretty decent one on NQ. So anyway, that was that. And as as you could probably imagine if you're watching this video and saw the market say, we broke down today. And I also said, hey, there's that same old bear flag continuation pattern that I posted yesterday on SPY, and that was covered in the video last night. There's your flagpole, and to get the measured target of a bear flag continuation pattern, you add the flag to where it breaks, the highest point within the wedge where it breaks down. If you look closely, zoom in. Oh, I didn't zoom in here. Let's pull it up again. If you look closely, you can see I added that notch above yesterday's closing candle. This was the closing chart of SPY yesterday, and so I started that the measurement right above there, assuming we might get one last pop into the wedge, and a kickback also to that 298.94ish. We'll call it 299, and that is exactly what happened. Let's pull up today's charts here. Let's go to SPY. Actually, we overshot it by just a hair, and what that was is what I view as a stop pop. I had somebody on the site today that posted some headline that grabbed off Twitter something late morning saying, "Oh, it wasn't the breakdown of these patterns. It was there's some teach-in talks now for with Trump's latest dealings." And my reply to that is I was in the car at 6:30 this morning driving, listening to NPR, and they were talking about the everything that's going on with Trump right now, and the possible impeachment that the Dems are stirring up. So there was buzz for the impeachment talks, and I believe that was yesterday's news, if I'm not mistaken. But I started hearing the buzz, like I said, this morning. 3 hours before the market opened, they were already talking about it. And my point to that was the market opened up. It had a big gap. That's a pretty big gap. It's not huge, historically speaking, but it's one of the biggest gaps we've seen in weeks right there. You can see about a point, over a 0.4% gap up, and then we built on the gains. So, the Trump impeachment buzz was already priced into the markets. You can see, and they just slowly grinded down. So I viewed that as a stop pop. It looked like they tried to run it, try to take it right above the top of that bear flag pattern, clear out the shorts, suck in some longs, and then the nefarious powers that be, whatever they are, take the market down. Market makers, high frequency trading, algos, call what you want. But it's whether there was no nefarious forces or not, it's what does happen when you have a lift in the SPY of from where we closed yesterday, 0.5%. Certainly clears out some stops and certainly brings in some longs as well. And then of course I'll get to the charts here. So let's wrap up on those. So you can see the breakdown was certainly impulsive. That's what one criteria. First criteria that you want to see, or criterion, is a flagpole, or the formation of an impulsive move down, followed by a level of consolidation, and then followed by an impulsive breakdown below the flag. And before I get off this 60-minute chart, you can see you have what appears to be quite likely another bear flag continuation pattern. There's very much an impulsive move from top of the flag down and out of it to what appears to be low area of consolidation. Volume was a little high. Typically you want to see lower volume on the consolidation within the flag, but that was also Trump's shenanigans coming in, firing off a tweet, which was a well-timed tweet. As I'll get to in a minute, I was expecting that bounce there off the lows and able to reduce some short exposure and then recycle in short on the bounce back. So we'll get to that in just 1 second. And before we move away from the S&P and those 60-minute charts, here's that the same inverse, or not inverse, a regular head and shoulders topping pattern with a upsloping neckline. Same exact measured target line. I had it breaking down right here yesterday before we even broke down today, and that's right where it came down. So what it does, it keeps that measured target right around the same level I've been calling for before these patterns even formed, and that is the top of the August to early September trading range, which on the S&P 500 is about 29.39, right at about 29.39. And you can see here, let me get the measurement out of the way. Same kind of flagging action there. Of course, this is the S&P 500. We were just looking at SPY a second ago. Okay, and then fast forward to the next post. Members, I'll do a follow-up video. There's a lot I want to get out. There was definitely some very significant technical development in Bitcoin today. I'm going to get to that later with you guys. Our nat gas short, degas long, up another 4% today. I posted an update. I revised our final target on that. We're coming up to that. And there's some movement in the ag commodities I want to cover as well. And of course, precious metals and treasuries continue to shine. The risk-off trade, which again, in my opinion, was a sort of a tell that we were going to get these breakdowns soon, because we saw, persistent bid recently. We saw, bullish technical setups, rallies. There were trades to be made there as well. But let's move on to this morning's post. And so this is right when SPY was breaking down. It was highlighted here. There it is. Let's see. There's little screenshot of there, typical stop rate I just talked about, bear flag starting to crack. And then I had NQ coming out, breaking the neckline of the head and shoulders, stating it was coming up to that key 77.89 level, which last night, and again I've been saying recently, that was a more significant level. And so I said the next sell signal would come there. Followed up with a video midday from members right as we were just up on and above that level, stating that I expected it to break while the video was going, and sure enough, before the video was over, boom, we broke down, and so I'll get to the NQ charts in a second. What else did I cover there? Oh, And then of course this one, same level in ES, 2980 right there, the yellow line. And the point of all this is there was just a confluence of not just support levels, but the very important support levels that I've been watching, the bear flags, the head and shoulders pattern, the necklines of those, these support levels here that I'm showing you on ES and NQ, and they all went at once. And from there, let's just pick up, let's take a look at ES. You can see what happened. This is an updated chart. I was showing you screenshots from this morning, and there it is. Once you get broke down, as expected, we didn't just limp around and goof around in the markets. We had an impulsive leg down because those support levels gave way, the bear flags, the head and shoulders, these support levels. And again, that was earlier today. And I'll get to another post in a second showing you this kickback. But these are the futures right now. These are, and this is live, the S&P 500 futures ES. You can see that similar flagging type action. So I see nothing in this chart. We've already got a kickback all the way to the 2980, a la Trump when he tweeted out, I'll show you the recordings, I'll release the recordings of the call. So that I think we've already had the opportunity, and I've highlighted that on the site. That was our, if you missed the whole breakdown, everything else, or you covered back here when a bounce was likely, I said we were very near-term overbought, oversold. That would have given you an objective short entry there. And while anything's possible, I still favor a resumption of the downtrend. It'll probably happen in the overnight futures, looking at the shape of this flag, and come on down here, and still looking to target right above here. 20, you know, I posted the exact, my trading plan. I'll get to that in a second earlier. 29.45. Depends on where NQ is at the time, but that's where I'm leaning towards, a reversal off the top of that level. I want to put a little asterisk there, sort of a caveat, which I'll try to get to in a second when we look at the longer term charts. This video might be a bit longer than normal because there is, this is all short term stuff. I'm living right down in the world of the 60-minute charts that forecast a near term direction, all that. But if these targets are hit, and I'm going to get to those in a second, the longer term charts, it could have implications on the more important daily and weekly charts. And so therefore, you know, somebody asked for Andy, do you still expect a bounce off the top of those ranges as well as 290, which is also 294 on SPY? And my answer was yes. However, if we start to get some more powerful sell signals on the weekly and daily charts, we could go on right on through there. Otherwise, as of now, that's my trading plan. Cover there, you know, at least reverse and go long for a bounce if and when we get there, whether it's tonight, tomorrow, or somewhere in between. And you can see again, this was the big level, the 77.92 level on NQ, which was the top of its August trading range. As I've mentioned, that's already been tested several times, but it was still a very, 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 very significant support level. And when it broke, like I said, we danced around it earlier. I highlighted that, and I did the video, started the video when we had just overshot it. Said that would be a momentum overshoot. We were right here, and then boom. I said as soon as we break the lows in QQQ and SPY, at that point, that's your next signal. That's when the market should dump, and that's exactly when we had that next leg, the big, you know, second half of the drop today, really. So that pretty much, you know, down to the penny was, you know, where the next objective entry was if you weren't able to catch the short of the breakdown of the flags and the head and shoulders neckline and everything else. Okay, so that was this post, just showing you we needed to break those levels as I just covered, and they did. And then the next one up was there's the video right here, the price targets and trading plan. So then I sharpened my pencil and posted this one, you know, saying, you know, at that point, that was, what time was that at down here, time stamped 1:29, so about 1:30 Eastern time, looking for a bounce. Trump made it a little bit higher than what I expected. I figured we'd come back at least at 29.69 minor support, but we made it all the way back, which was a golden opportunity, by the way. When you come back to an even, remember, the more, well, back up. Support once broken becomes resistance. That's number one. the more significant a support level is, the more significant the resistance level once it's broken and comes back. So that was again a golden shorting op there, I believe. And who knows? Maybe we recover it overnight and I get stopped at everything, and or maybe we hit it again. But as long as we remain not too far above there, I still favor this scenario. So that was again 130 little kickback rally, and then the next leg down to come. So that's sort of those flags that I'm showing you right now that have set up since then. That was the kickback rally right there. So this is NQ. Again, that was at 130 today, and this is what NQ looks like right now. You zoom in tight, and you can see that is the kickback rally right here. That's from that point, and that's about about where I had NQ going, and so we're primed, ready for the next leg down, I believe. And if not, you have 77.92 was support, and now it should act as resistance. It's a whippy market. They might want to run stops. So if you don't set a stop if you're short. You don't put it at 77.92.50 or 77.93. You give it a little room through there. You just have to be flexible and adaptive and allow room for those stop clearing runs. So you set it a little bit above. You can see there's also some reactions around this level here. And again, that's if you are short NQs or even QQQ. If you trade QQQ, you can certainly follow the futures charts and Q off these levels. Often you'll see comparable levels on QQQ. Sometimes you'll see levels on here that support and resistance levels or trend lines that you can't pick up on QQQ, because this is showing virtually round-the-clock trades that you don't have on QQQ. All right, so back to that one. That was NQ, and then finally RTY. And again, you can see, all of these are kind of contingent on each other. Now, RTY is not going to lead the large caps. It's the other way around. But what I was looking at is, bounce in RTY as well, followed by another leg down. And you can see we start to get some pretty decent support coming around 1528. Not as solid as those levels, especially on SPY. Yes, that's the big one. And to make this very clear, I had said earlier today, that's where, even though I'm trading NQ and RTY, I'm queuing off ES. When ES hits that level, that's where I'm looking to cover, kind of hone in on my positions for NQ and RTY. That'll determine when I'll reverse, close the shorts, and probably reverse long for a bounce. Again, unless we happen to really, just waterfall through there. And I'll tell you now, unless something changes, that is my plan, to reverse for a bounce on those levels. And what I'll do is, if we happen to smash right through there, this is not ES, but imagine this was ES, and that's your August trading range, and we smash right below it, I'll have stopped somewhat below. So then I'll either go back into shorts if I did reverse to longs, or just stop out of longs, see what happens there. So we'll get to that in just 1 second. Let me just give you an updated chart on RTY, because that was earlier today, about 1:27 p.m. That's what happened to RTY. You can see we came close to that target, but we haven't yet hit my targets on NQ and most importantly ES. And so we can see a similar type of consolidation, very flaggish looking action, impulsive move down, bear flag type action. And so actually RTY could easily exceed that target. And that's why I said, especially this one, I put a much higher weighting into what the large caps do here. There is some minor support here. I need to mark that. Let me add that to this chart as I'm doing this video, because I'd be remiss not to point out we had reaction lows here, a couple candle bodies right there, and that level we hit. But again, I think it's just a bump on the way down, because as I said in the earlier post today, the reason I was looking for a kickback rally, we're extremely oversold in the very near term. I'm talking the 5-10 minute charts, intraday charts, not here so much. Well, we got pretty oversold on the 60 minute, but either way, that's what I still favor there. And then in that same post in the comment section below, when we had that bounce back to 2980, I took a screenshot and just said, there it is. There's the near-term bounce I was looking for. It's run its course, and that's your objective level to add on, and which it was proved to be so far. We haven't come all the way down to that next target, but you certainly had a very lucrative trade if you're trading futures to short that kickback to the 2980 level on ES. Okay, that's all 60-minute charts, kind of near-term stuff. And again, this is where it gets interesting because it's sort of a domino effect, or it can have a ripple effect. Should we go much lower? Should we hit those downside targets I just showed you on SPY and NQ? Which are not too much further from today's lows, but they should take us. We could crack this level. Now, this is a daily chart. I've jumped over to the daily charts now in QQQ. Here's that trend line off the lows on December 24th. Remember, SPY already broke down and back tested. QQQ has been flirting with that trend line, and today we had a big red candle and parked right on it. We also fell back and closed down below the August trading range in QQQ, so that's something to note. As I mentioned, unlike the S&P 500, which is being run up by dividend stocks, utilities right now are doing great, things like that, steady Eddie, defensive stocks, the high growth tech leaders that took this market to new highs since the 2009 lows, they've been lagging. The NASDAQ 100 and tech has been lagging, failed to make new highs, which again, maybe they do, and if they do, really doesn't change anything in the technical outlook, as I've been saying, because it'll still be a divergent high. But the fact that they've fallen shy, maybe that's it. And it also shows that they're just not. They were down big today. QQQ was down 1.33%, and we closed right on that support. So let's leave it at that. Also, 189 was a pretty big level. That was the top of the trading range there for August and early September. And again, we're right about a trendline support. And remember, XLK to me, single most important sector, and in fact, I'd probably put a higher weighting on this one sector than I would on the chart of the S&P 500 as a whole. Because when tech breaks, the market breaks. And you can see there's the trend line off the lows on December 24th. This yellow trend line is an alternative trend line I have that comes off the lows right here on the late May lows. And so I zoom in really tight. You can see we closed right about on that. We made almost a perfect kiss of that alternative secondary trend line, or what I call the BOD, benefit of the doubt. You're going to give it the benefit of the doubt since this market's been so resilient. If you have two trend lines or two support levels in close proximity, wait until the second of the two break for the higher probability sell signal, or the benefit of the doubt. And that's that trend line there. So really what it means is, break under today's lows. Since we kissed it, that should do the trick. Unfortunately, it's a daily chart, so all that matters is a daily close. I hate to throw that out to you guys. It's not as simple as just load the boat short if we pop under today's lows. Like I said, if we do, we're going to come up on those support, the key 294 support on SPY, the top of the August trading range. We most likely will bounce there, at least on the initial tag. And so what that could do too is give us a candlestick that goes through there, but then closes back above, and then you get one of these. We don't have it here, but the fat body, which is the candlestick, the fat part of the body, and then the skinny part, which is the candlestick shadow or tail. And all that matters is a daily close. But since it's support, you could see at any point. I'm just trying to get you ready for what could happen tomorrow, because especially for the YouTube channel, I'm not going to finish. At best, I'll do a video tomorrow, and if there's nothing big in the markets, I might skip a day, do the next one Wednesday. So what you want to look for, if you happen to break that, and there's waterfall selling intraday, and we're way down here. And let's say SPY has fallen well into the August trading range, and it looks like there's very little chance of recovery, then you might have a solid sell signal, and that's what you want to look out for. And this market has just been I don't want to use the wrong words, but I'm not. Ticking time bomb comes to mind. It's just been ignoring too many red flags lately. Too many red flags. The tech and coupled with the bearish technicals, when the floodgates finally break, things can happen very quick. So you can glance some of the levels I have in XLK below. And again, that's what I wanted to point out, is that I spent the first part of the video focused on short-term targets where I think we'll probably get a bounce, where the odds are very good, where unless I see something that convinces me otherwise before then, I'll plan to cover at SPY 294 reverse. You can see we're not far above it here on the daily chart, and showed you in that 60-minute chart. But again, this is just the longer-term technicals are bearish, and that sometimes will override short-term bullish developments, and especially early on in a breakdown. Think back here. Think what happened last October. Once the dam broke, tech broke first. It broke up here at trendline break. You started to smash through, and that's the nature of an impulsive sell-off. You smash through resistance levels where normally you would expect a bounce. Normally the dip buyers would come in, and what they do is they do step in at the early levels. So as I told you before, if I was bullish and I thought the market was going to new highs, I would be buying with both fists at 294 and throwing away the key with a stop somewhat below. You have to always use stops. And that may work out for you. So there's, that's a level where, again, if my read on the charts was different, I think that would be a great level to buy. You had a breakout right there. We went in over a month-long trading range, broke out above it, and come in to back test it again would be very bullish. And that's just a big level all across the board. It's not just the top of the trading range. It was the high back here. It was the high here roughly. We had a double top high. We broke out. And so there were a lot of reactions along that level, but I'm looking at this, and then depending on what happens tomorrow with these daily candles, how we close, does QQQ to XLK, whether it's tomorrow or later this week, do they close solidly below those trend lines? And then if so, I start to turn my focus out here to the all important weekly charts, which have already, they've been the market's been flirting with key supports. You can see it here on QQQ. Here's the trend line off December 24th. Look at all these reactions on it. That's the same trend line I showed you on the daily chart, and as I showed you, we closed right about on it. And so a solid red weekly close, and we wouldn't have that until Friday, of course, but that would be quite bearish. Next thing would be that 200-day. So that's it, guys. I told you the video would be a little longer than normal, and I gave you some near-term levels to watch on the 60-minute charts. QQQ, if you want comparable levels. I'm really, again, I'm more focused on SPY right now. The QQQ chart's a little sloppier on that 60-minute chart. You just have that nice clean level there at 294. And it's just so obvious to all eyes, I think, like I said, bullish if we can, not even so much bullish if we just bounce off it, but bullish if we bounce and then rally from there, a sustained impulsive rally, but quite bearish if we just have a muted bounce and then break down below it, and very bearish if we smash through it like it's not even there tomorrow. Who knows what'll happen. I'm just kind of laying out the scenarios. And then the most important thing is to be adaptable. Don't be flexible. Don't be rigid. Don't have a trading plan that's unyielding, that, hey, this must happen. We must bounce there. Again, if 294 breaks and I happen to reverse from short to long, if we even hit it tomorrow, if I happen to reverse short to long there, and then we go down below, I'm going to assess the nature of that. I'm going to look at NQ. I'm going to look at other things, QQQ. Where are they at? I'm going to look at the market leading stocks. Are they coming up on support, or did they all just break support? And then I'll make the decision as to whether to cover those longs. Should I go long there, or reverse back into short trades? All right, we'll stop it here. This has been Randy Finney with Right Side of the Chart.